Good afternoon and welcome to this week's edition of Halftime Talk. I'm delighted to be joined on this Wednesday by Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets, who has been under lockdown and on home confinement for a long time now, and I'm sure looking forward to getting out. So Helima, welcome. Welcome to
Thank
the
you for
show.
having me.
Let's kick off with our favorite subject, perhaps, and that is all things OPEC, or as we must say these days, OPEC plus, which still sort of runs off the tongue a little bit badly. But nonetheless, that's what it is. Over 20 countries met last Thursday, and for the third time in a row, it would appear, surprised the market with a decision to raise supply over May to July period. And since then, the oil markets seem to have been quite confused on how to digest that news, because we have had spikes, we've had collapses, and now we're having different movements. So your thoughts a few days after the meeting?
Yeah, I think what was very interesting about the meeting is that His Royal Highness Prince Abdulaziz bin Salman, the Saudi oil minister, he kept his reputation as a prince of plot twists. We do know that surprises can work both ways. I think the market had come complacent that it was going to be one-way surprises, that the Saudis would continually seek to, put the floor under prices and restrict supply. But we had, several key producers who have been advocating for putting more barrels on the market. I think that's the camp led by the Russians, who have been eager, particularly their corporates, to put more barrels on the market. Alexander Novak, the Deputy Prime Minister of Russia, who still manages the OPEC file for Moscow, he's been arguing that the market is strong enough to absorb these barrels. And if OPEC Plus doesn't put the barrels on the market, another producer will, which we all think was really about the United States. And so I do think that we had almost a December 2020 replay where, at that meeting, His Royal Highness sort of bowed to the wishes of the Russians, the Emiratis, the Iraqis to do a phased increase. And the question going forward is, we're looking at potentially seeing, 2 million barrels of OPEC Plus coming back onto the market over the next 3 months. Will they have to adjust again? Now with this monthly meeting structure, I do think they have the ability to make adjustments if the decision is not sort of suitable for the market, given the demand outlook. So I think the market is digesting this. I think the concern that we're seeing this week is the thought process of 2 million OPEC plus barrels. And wait a second, am I also going to be getting more Iranian barrels? And is this going to be too much supply? So I think the softness this week is a combination of concern about the OPEC plus decision, but really also what does that mean in the context of maybe getting Iran barrels back as well?
If you look at the point you started with, this surprise, the Prince Abdulaziz surprise, why is the market so off the mark, so to speak, if you like, from the expectation? Third meeting in a row, yeah. I would say the market, the watchers, myself and everybody else that sort of reads the tea leaves on this thing, we're not only off the mark, but off by a long shot. I'm wondering, how do you interpret that? 3 times in a row, the market is way off the decision.
I think it's clear the era of OPEC or Saudi Arabia forward guidance is over. If we think about, before Abdulaziz was the oil minister, we had, biannual meetings. You'd have situations where the Saudis might telegraph a decision in advance of the meeting. I think about that, June 2018 meeting when they announced that production increase. That had been telegraphed weeks ahead of time by the Saudi oil minister. After the US pulled out of the Iranian nuclear deal, there was an expectation that Iranian barrels would be restricted. Khalid al-Faleh was out there signaling before the meeting what Saudi policy and OPEC policy would look like. His Royal Highness, he's the Greenspan of the sort of OPEC central bank
who he
structure.
Describes as his hero. I think he's
used his hero. Yes. And you think about Alan Greenspan. Alan Greenspan liked to keep decisions close to his chest. There was even speculation that you could see the decision potentially if you looked at the size of his briefcase. A bigger briefcase meant that he was going to change rates policy. Smaller briefcase meant they were going to keep it the same. Nobody knew really what Greenspan was going to do. And there was a view that that potentially gave him more power in the sort of process. I think His Royal Highness very much adopts that style of Greenspan, that he wants to keep us guessing to the end. And I
suppose
think
the underlying ace in his card, although it's not really an ace nonetheless, but the fact that there's 8 million barrels of idle capacity sitting amongst all of these countries, the market is really resting on the discipline question,
right.
And with that, the vulnerability, I suppose.
Absolutely. And I think what we've also seen with His Royal Highness, particularly with that January decision, when he came out and said, the big surprise in January, when he came out and said, I'm doing an additional 1 million barrels. I mean, the fact that if Saudi Arabia is willing to act unilaterally, we also now almost have a 2-decision structure. We have the OPEC Plus decision that we all wait for in the Hollywood Squares press conference. And then we wait for the Saudi decision as well. So I actually think that we're much more seeing now the sort of activist Saudi policy as well, that they will unilaterally adjust to balance the market. And so I think a lot more is riding now on these monthly meetings. They're showing that they're willing to really change up strategy. Whereas again, a couple of years ago, we'd be meeting twice a year in Vienna. There weren't these extraordinary interventions in the market. And I think they were caught flat-footed at times because of that old structure. So I go back to 2018 when they announced that, million plus addition, at that June meeting, a very controversial increase, because the expectation was that President Trump was going to zero out Iran and those barrels were needed. And also remember, Libya was off the market at that meeting time. And then you fast forward to what happened, in late October, where President Trump said, I'm going to issue 7 exemptions for importers of Iranian oil. The market tanked. OPEC had essentially oversupplied the market, and there wasn't a quick adjustment mechanism. And we had to go to the next meeting before they adjusted. I think now with this monthly meeting structure, they can adjust in a quicker fashion, but it makes it harder as analysts to figure out what they're going to do.
I mean, when you look at the sort of coming out of the dark forest of the COVID pandemic, every financial asset class has to find its journey out into the new world. I mean, you look at the stimulus, obviously America being at the front of the class, printing trillions of dollars. When does the Fed pull back? When does the Fed start to raise rates? When all of this support to these markets, and of course, oil is no different. We have 8 million barrels of idle supply supporting this market. How do we navigate our way out of the dark forest? And when we look forward, you mentioned earlier the concern OPEC has that others might jump into their market share. And so they moved on this occasion, even though maybe the demand wasn't there solidly, but because of the other producers, perhaps they could lose market share. And your views on that, coming out of this pandemic, managing the return of these barrels to the market. Does OPEC Plus have to worry about shale? There's a lot of mixed voices. Shale is dead, shale is not. The financiers have given up on shale. Do they need to be concerned about shale over the next 6 months?
Well, I think what we've seen so far is remarkable discipline from shale producers. And so, if you are, somebody who wants to be sort of optimistic about the market, you would say, well, on the demand side, US gasoline demand looks like it's set for a good summer. Shale producers are remaining disciplined. And so, we're set up for, a better summer and fall in terms of the oil outlook. I think what's interesting, though, is the question of if I'm sitting in Moscow, because I always say it's not only about oil. I think from the standpoint of what drove the Russian decision last year when they didn't want to cut additional barrels at that March OPEC meeting, I think it wasn't just about losing market share. I think it was also about what that meant politically. I think from the standpoint of the Russian leadership, they were tired of a situation where OPEC Plus and Russia cut, And if you're a Russian corporate, by the way, the tax structure means that like the upside gains go to the state. You want volume. So if you're a Rosneft, you always want volume. But I think Igor Sechin was tired of a decision where, you know, his company would cut, shale would grow, and then the US would sanction Russian energy corporates. So you want to think about really what happened last year. We had new sanctions on Rosneft trading for continuing to deal with the Maduro regime in Venezuela. We had a stepped up effort to block completion of Nord Stream 2. I think there was a view in Moscow that American energy abundance was enabling a very punitive US sanctions policy. And I don't think that's entirely wrong. Like I remember sitting in early meetings in the Trump administration. I'm on the National Petroleum Council, and this meeting was on the record, so I'm not saying anything secret. But I remember in that first meeting where you had Rick Perry as energy secretary and Ryan Zenke as then Secretary of the Interior, and they were talking about American energy abundance. And they were saying, like, it gives the US tremendous freedom in foreign policy, that you can sanction foreign policy adversaries like Iran and Venezuela and shield US consumers from the effect of that policy. And I remember they were looking at US producers and they essentially said, do your patriotic duty, get the barrels out of the ground and on the water. And I was thinking, gosh, I'm not sure that's what investors want. But it was really the idea that shale had enabled this assertive US foreign policy. And I think
do you think
the Russians,
Biden will stand behind that as well?
that is a great question, because if you think about Biden, he's very focused on the energy transition, using the power of the White House to essentially speed up the transition to renewables. But we saw something very interesting in advance of the last OPEC meeting, where you had this tweet from US Energy Secretary Granholm saying that she had just had the call with her counterpart, His Royal Highness Prince Abdulaziz, and that the US and the Saudis affirmed their commitment to sort of stable energy supply, stable prices. And many people read that as the US is continuing to micromanage OPEC. And His Royal Highness in the press conference said, no, this was just a regular call. There was no direct oil ask. But that has led to some confusion about, is Biden actually going to seek to micromanage OPEC? I looked at the language of the Granholm statement, and it looked essentially like stock US policy language. I mean, that's always been the policy, to want stable supplies of oil, stable prices.
Well, the difference being between the two, perhaps Trump was looking for cuts and higher oil prices.
Right.
You would imagine Biden's perhaps back to the old approach of more supply, lower prices when a summer is ahead, where you're looking at $3 to $4 on the average price of gasoline.
Right. I think what was interesting about President Trump was he was so activist. And at first we thought it was a one-way trade, that essentially Trump would be tweeting whenever WTI got into the mid-60s, his Twitter finger would get active and he would be out there slamming OPEC, making the calls to the kingdom. But we saw he went the other way in the price war to protect US producers. I think the question with President Biden is, are we going to revert back to the old policy? When prices get high enough to hurt US growth, global growth, do we make the call? The question is, when is a specific oil ask as opposed to the stock language about stable supply? We certainly saw during the Arab Spring when we lost Libyan production, Obama, his team did make the call to Saudi Arabia when oil was over 100. The question is, like, when did you get the specific ask to Riyadh for barrels? And I think the price point for the specific ask as opposed to stock language may be higher, certainly, than it was under the Trump administration.
If we look at the other challenge for OPEC Plus, we have the shale potential returning. We also have Iran returning outside, under sanctions still, but the number of exports seem to have, doubled, quadrupled, depending on the data, but essentially up to about 1 million barrels a day now of exports coming out of Iran under sanctions. We have the big meeting in Vienna this week. Would you be, what's your thoughts for the outlook for that meeting, for America-Iran rapprochement on the nuclear deal?
I think these next couple of weeks are going to be critical. I think that there's not all the time in the world to get the deal done in the way you want it done if you are the Biden administration in Washington. We're in the waning days of President Rouhani and Foreign Minister Javad Zarif in Iran. I mean, they were the Iranian architects of the 2015 agreement. They staked a lot of their domestic political capital on that deal. And they frankly suffered at home when the US pulled out of the agreement in 2018 and reimposed sanctions. We're looking at potentially seeing a harder line government come into power post-June elections. And you could be dealing with a much changed set of circumstances in terms of the Iranian ask. And so I do think that this is the kind of moment, if you are the Biden administration, if you want to get a deal on the terms that you want in a relatively short period of time, now is the time to try to strike a deal. And I think the real question mark is over this issue of timing. You know, the Biden administration signaled on the campaign trail, or before they came into office, that they were looking to get back into the deal. They expressed concern about, you know, how Iran is basically reassembling their nuclear program, high-level uranium enrichment, using high-speed centrifuges. But they have said since taking office, Iran must go first, that they must reverse all breaches of the 2015 deal before they talk about sanctions relief. And the Iranians have said, well, wait a second, we were fully compliant with the deal and it was verified by the IAEA, and you pulled out unilaterally in 2018. You reimpose sanctions in contravention of the agreement. You have to rectify that before we make any adjustments to our nuclear activities. And so we've been stuck on this issue of timing. The question
is there a real incentive for Biden? I mean, I could see the Iranians want to get out of sanctions, but they're getting 1 million barrels into China. Right. They're not under a lot of duress. What's the incentive? Where's the win-win for all of these parties to find a deal?
Well, you mentioned these barrels are going into China, but they're going into teapot refineries, and they still are essentially distressed barrels. They are, they are having to take a discount to place those barrels. So they're not getting full market value. So I do think there is this incentive for Iran. Also, Trump imposed around 1,500 new sanctions on Iran. In his waning days in office, they put new sanctions on transactions with the central bank, which make it, there are all of these mechanisms now that complicate Iran's ability to do normal trading relations. And so I do think even in the sort of situation where there's a rising price environment, there's more lax enforcement of sanctions, they still have an economic incentive to want to get out from under the sanctions weight, really also on the central bank sanctions. And they want access to their hard currency in frozen accounts, billions of dollars sitting in frozen accounts. If you're Biden, you're looking at the Iranian nuclear clock. You're looking at the fact that they are once again enriching at 20% levels. That's really important because it's 90% of the way to having weapons grade material. Iran is once again using high-speed centrifuges. They are using facilities that had previously been barred under the agreement, like the Fordow facility. That's a highly impenetrable facility. They are doing experiments with uranium metal that could potentially have dual use, have a weapons use. And so if you are the Biden administration, you are concerned that if you don't get an agreement with Iran, you will have to negotiate with them. We're on the precipice of having a crude nuclear device. And that changes the dynamic. Then you're essentially in a situation like Pakistan, where the deal you cut is more on unfavorable terms, or in North Korea. They don't want to be dealing with Iran on the precipice of having weapons capability. So there's the nuclear clock, which is ticking.
Do you have also, do you speak of the timing, the challenge of timing, and there's many sort of boats that have to be pushed forward, including the alignment with the regional allies, Israel, Saudi Arabia, the UAE, which last time they kind of didn't really bring everybody along. This time they've sort of indicated that they need to bring everybody along. Is that viable in this window?
Well, this is the concern of the region, that essentially deals are being struck that don't basically take their security interests into consideration. That's one of the key messages you're hearing from foreign ministers in the region where you sit, is that, wait a second, we need to be at the table. The question, though, is there a sidetrack to deal with these regional concerns? Does it get fully brought into the P5+1 process? I think one of the biggest wildcards is, what is happening with these security incidents in the region? Every day or every other day, we get a report of another drone attack or missile attack on a Saudi facility that's emanating from Yemen with the Houthis. So far we've had no major infrastructure damage, no loss of civilian life. But if you were to get to a situation where you were to have significant civilian casualties resulting from one of those attacks or serious, destruction to infrastructure, I think that would change the dynamics of negotiations. You also continue to have ongoing attacks by Iranian-backed militias in Iraq on bases housing US troops. Again, if you get to a situation where one of those missiles results in significant loss of US servicemen in Iraq, I think that changes the dynamics. And so I feel like there are all these wild cards that could upend the negotiations. But right now, I do think that we're gonna know in the next couple of weeks what the remainder of the year is likely to look like.
Do you think we could actually, just to sort of in brief terms, come out of Vienna with positive indicators towards rapprochement, where there's some kind of a line to something?
I think we should look for indications that we might get, instead of the language is being dropped on, you have to go first. I think if we see language about we're going to have like simultaneous action on the part of Iran in Washington, so the US rolls back sanctions, Iran rolls back nuclear activities, to me, that is what you look for a sign that we're making movement on these negotiations. As long as each side basically digs in on the idea that the other has to go first, I'm not sure we're going to get, much progress in the next couple of weeks.
I mean, the interesting thing about the Iran nuclear talks in Vienna is that all of the major players are there, Russia and China included, and they're part, obviously, of the JCPOA agreement. But meanwhile, in the bigger world, the other big challenge for the energy markets is not only the geopolitics of the Middle East, but the geopolitics of other corners. The South China Sea seems to be every day another sort of face-off of some sort. And increasingly now, Eastern Ukraine looks like, as we come out of the winter into the spring and summer, the potential for a real conflict to flare up there. What are your thoughts of the wider geopolitical risks that the current oil markets and markets in general are not really accounting for?
Well, I mean, this is such a great question, because I used to think that oil was a leading indicator of geopolitical tensions. Like, I remember, you talk about, 10 years ago, anytime there was any indication that potentially you might get an, Israeli strike on an Iranian facility, oil would react. You'd have situations where oil was reacting to political events, even when supply was not really at risk. What I think has really changed with the development of the resource in the United States is oil became a lagging indicator of geopolitical tensions. I mean, if we think about 2019, we had, attacks on tankers, right off the coast of UAE. We had the East-West pipeline targeted. We had half of Saudi Arabia's oil taken offline temporarily, and that, a remarkable attack on the Abqaiq facility, the nerve center of the global energy system. Oil reacted and then fell back. And so the market has discounted not just geopolitics more generally, but geopolitial events that actually materially impact supply. The market is sort of discounting that. And so I think that, the question is, at some point, do you get a reset in terms of oil once again sort of signaling that there might be geopolitical tremors that we need to pay attention to? I think oil might become now more of an epidemiological indicator. So, we are seeing oil react to, concerns about, new lockdown restrictions. We're watching.
Well, at the end of the day, this is really a demand story, isn't it? The supply, the OPEC issue is managing, given the weakness of demand, and sort of finally wrapping up our conversation on demand, the outlook for demand recovery. We've seen the IEA and OPEC continuously revise downward the demand recovery in 2021. Now it sits at about 5.5 million barrels a day. What's your outlook for that being achieved?
We remain, relatively constructive on demand based on what we're seeing in the United States. Places where we've seen, progress on the vaccine, we're optimistic where we're going to have that demand recovery. So we are optimistic about, summer driving season in the United States. We remain optimistic about what we're seeing in China, but we are very cognizant that COVID is not in the rearview mirror. And we are watching very closely, not only what's happening in Europe with the reintroduction of lockdown restrictions, we'll be watching very, very closely what is happening in a critical demand market like India. So again, we remain optimistic for now, but we are very well aware that COVID is not behind us, and that is the biggest risk factor in this market right now.
And the inconsistent sort of vaccination rollout we've seen in around the world, obviously those that even have vaccines, as many countries don't even have a vaccine opportunity yet. How does the market navigate that from the point, if everything is centered around this sort of OECD being back to vaccinated normal, so everything's a go, or should there be still concerns around the non-OECD where vaccination rollout will be slow and probably years in its implementation?
I mean, I think we should be concerned about this. When we talk about risks that are being discounted, when you're on calls with, health experts, the biggest concern I'm hearing is around the issue of vaccine penetration in the developing world. And it's not just an issue of global health equity. It's an issue also of, if you have countries, particularly in sub-Saharan Africa, without access to the vaccine or rejecting the vaccine, is this the place we're going to see mutations? And essentially, these are the mutations that then become the problem for the OECD. The idea that we're not disconnected from what is happening in sub-Saharan Africa. And I think that's why you're hearing a lot of talk in Washington about the commitment to the COVAX program to ensure that you have vaccine availability in the developing world. It's not just an issue of the US being magnanimous in terms of helping developing nations for their own sake. It's also about, protecting the United States and global markets from the effects of a mutation that we don't have an ability to deal with.
Well, not to end on such a concerning note, but inevitably a realistic and pragmatic one. There's still many challenges to face in this COVID pandemic, but let's wrap up our halftime talk. Thank you so much, Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets, all the way from Brown University in Providence, Rhode Island. Thank you so much for being on the show this week.
Thank you for having me. Have a wonderful afternoon.